Hello and welcome to this special edition of Trading Places Live. I'm Tom Bowley, Chief Market Strategist at earningsbeats.com. And today I want to do a little something different. I want to take a look at the short squeeze and what it means, some of the opportunities that it creates, and how we approach it at Earnings Beats. So as I go through, what I want to really focus on is first, what is a short squeeze? Second, which stocks are subject to a short squeeze? Then talk about how we organize a chart list to account for all of these heavily shorted stocks. And then actually go through charts and show you what happens to these short squeeze stocks as they begin to move higher and higher, and what that means, the implications that has to those who are heavily short. So to get started, I'm going to give you an analogy. I guess first I'll show you a stock that's being heavily shorted, and you can see on this chart, this is GameStop, GME, and look at what happened here on this particular day. You can see we got the move higher. We broke out above the prior highs, and look at the volume really start to escalate on this move to the upside. There's a lot of demand when a stock is being heavily shorted. There's a lot of demand that creates more demand, and so it's almost like with heavy short interest, you have guaranteed buyers. If you think about it from a long perspective, if you invest $10,000 in a stock, you know how much you can lose. The absolute worst case is that the stock goes to zero, which probably isn't going to happen. But if it did, you would lose $10,000. With a short, you're selling borrowed shares. And so if you short 10,000, it means you're selling $10,000 worth of stock. You have to buy it back at some point. Now, in the best case scenario, you short it, you sell $10,000 worth, and it goes to zero. And so your best case scenario is you make $10,000. Worst case, though, is that the stock that you paid $10,000 for doubles, triples, quadruples in price. And when you go to buy it back, if it's quadrupled, you have to pay $40,000 for something you originally sold for $10,000. That's a $30,000 loss. What if it goes up 10 times? You're stubborn. You just hang on to it. So that stock that you sold $10,000 worth of now is worth $100,000. You have to buy it back. You can see how things kind of get crazy. It's the opposite of being long. So what is a short squeeze? Well, I guess maybe the first thing to explain before we get into a short squeeze is what is a short sale of stock. And I always use an analogy, and you can kind of check out this chart while I'm talking about this particular analogy. But let's say you're someone who, you're really into some of the older cars. And for whatever reason, you think that there's, going to be a drop in the value of Lamborghinis, okay? And your next door neighbor owns a Lamborghini, doesn't use it, just sitting in his driveway. And so you go over one day and you say, you know what? You mind if I borrow that Lamborghini for a while? And the neighbor, because he's so nice, says, sure, go ahead. Here are the keys. So you take that Lamborghini and then you go down to some shop, car shop, and say, I'd like to sell this Lamborghini at current market rates. And, I'm going to come back and buy it later after the price drops. So you sell that Lamborghini for 50 grand. I don't know, whatever. I'm not really a car person, but let's just say it's $50,000. All right, so you sell the car for $50,000 because you believe the value of these Lamborghinis is going to go down. Now, at some point, your neighbor is going to want his car back. I mean, you just borrowed his car and then you went and sold it, but you're going to have to buy one back just like that to take back to give to your neighbor at some point. But what you're hoping is that you're going to profit from this, that you've borrowed his car, you're selling it because it's overvalued at $50,000, and you're going to buy it back when it goes to $40,000 or $30,000, make the money, and then after you buy it back, you'll return it. Here's your car back, and hopefully he's happy, he's got his car back, and you made $10,000, $20,000 in that period of time. Well, things don't go the way you like, and the value of that Lamborghini goes from 50,000 up to 70,000. So you're like, okay, I got to cut my losses. I can't afford to take more than any kind of bigger loss. So now I'm going to buy that Lamborghini for 70,000. Well, you're creating more demand. Now you're going out and adding to the other buyers that have been driving the price up from 50 to 70. So next person that comes along might have to bid 71 for it. But my point here is that you sold it for 50. It didn't work out the way you thought it was going to, and you had to pay 70 to get that car to return it back to your neighbor. So in a short squeeze, essentially what's happening is you've got all these folks that have shorted GameStop. And at the last I saw, GameStop had a short interest or short percentage of float of 130%. Now that's the only stock I've ever heard of that's been above 100%. I didn't even know you could get more than 100%, but apparently you can, because I've seen multiple sources show more than 100% of short interest of float on GameStop. Now, float, if you're not familiar, is just it's the number of shares that are outstanding and available to the public. So if you've got more shares shorted than are actually in circulation, that's a lot of borrowing that's taken place. Just to give you a little frame of reference, I would say any stock that's over 10 or 15% of its float that's short, that tends to be a pretty high level. And especially once you get above 20%, 20% is the threshold we look at earnings beats. And I'll show you that in just a little bit. But 130% is off the charts. That's a lot of folks betting against GameStop. So when GameStop starts getting into one of these moves to the upside, you can see the volume escalate as it goes higher. Here, as it's going up, you can see the volume escalate. See back here in September when it would break out, how the volume escalated. This stock's had a short percentage of float over 100% for a while now. Probably back in September, if my memory serves me correct, that we might have had, it might have been somewhere around 98%. But it's been going up every month. And the last month I saw was 130%. So there's still a lot of folks betting against GameStop. And when it goes up, imagine you're the one that's holding borrowed shares that you've sold. Let's say you sold them down here at 5. You just knew GameStop was going to go out of business. So you shorted at 5. Well, stock goes up to 8. Then you're sitting there. Should I cover? Well, if you're like a lot of folks, you're a little stubborn. Maybe you shorted some more when it got to 8. And when it got back down to 6, you're feeling really good. And you're like, okay, this thing's going back down. I'm going to short some more. Next thing you know, it's back breaking out again above the $8 level. Gets all the way up to 11. And it's a rinse and repeat kind of situation where each time the stock goes up, and I kept looking at the short interest and the short percentage of float, expecting that one of these months it was going to come down, and yet it kept going higher and higher and higher. And so that, in my opinion, is what continues to fuel this stock, especially when we get these breakouts. Because at that point, you've got shorts that are starting to panic, and they add to the fire, if you will. Just add, just pouring some kerosene right on the fire. And they've got to buy. And so you just get these buyers trampling one another. Another analogy I'll use sometimes is with a really big short squeeze. It's kind of like being in a movie theater that seats maybe, 500 people, and you got one door over in the corner at the bottom left of the stage, and somebody yells fire. And everybody's got to try and get out that little door down at the bottom, but the place is packed. That's what it's like with a short squeeze. You've got a ton of short sellers. They all want to get out of the stock, but price is going up so rapidly as they just trample one another trying to buy on top of each other. And so that's the beauty of a short squeeze. Now, is every stock that's heavily shorted a great one to own? Absolutely not. Many stocks are shorted for very, very good reason. I would be careful about stocks that are in downtrends. Respect the downtrend. There's a reason why the stock's going down. The short squeeze really doesn't take, doesn't have much of an impact until you start getting into an uptrend. And then short sellers have to emotionally try to handle each one of these breakouts. And eventually some of them just start saying, okay, I'm going to throw the towel in. And as more and more and more of them throw the towel in, that's when you start getting these major moves to the upside. So that, in essence, is a short squeeze. You just have a lot of shorts, you get breakouts, and you just have a ton of buyers. Just think movie theater, everybody trying to squeeze out of the movie theater after somebody yells fire, and they got to go into that one door in the corner. Everybody's trampling everyone trying to get out. That's what a short sale or a short squeeze really looks like. So which stocks are subject to a short squeeze? Well, you've got to have high interest. You've got to have high short interest. Now, this is the short squeeze chart list that I have. And in our chart list, what we do for our members at Earnings Beats is we update this short squeeze chart list every month. And in the title, first of all, we have it ordered by the highest short percentage of float to the lowest, and we cut off at 20%. So some months there might be 60 stocks, some months there might be 80 stocks that are shorted. But right now, being in a secular bull market, a short squeeze chart list is a great chart list to have, because a rising tide many times lifts all boats. And as some of these short squeeze candidates break out, they can be absolute monsters to the upside. So this is the first one. So there's that 130.6%. That represents the short percentage of float. Now, if I go to the next one, you'll see the next one is Virgin Galactic, SPCE. The next highest is 75.28%, which is still kind of crazy. And you can see when it was in this uptrend, volume was picking up, broke out above these prior highs, finally pulled back. But it's very possible that we start to turn right back up. Now, I don't like buying these on pullbacks. I like to actually be in during the uptrend and the breakouts, because that's usually when we get the biggest move to the upside. I mean, look at this here. We were kind of trending higher, but once we broke this double top, we went from 21 to 27.5 in about 4 or 5 days. And look at the volume that came in during that period. So that's what you can run into with a short squeeze, is you can run into a very, very quick and accelerated move to the upside. Next one would be 66.47%. This is Fizz, National Beverage Corp. And another one that you can see, it's gone through these periods. When it gets going, here when it gets going, here when it gets going, look at the volume accelerating. That's a pretty good signal that you're getting a nice short squeeze. Next on the list is Ligand Pharmaceuticals. This one just started making a move with volume picking up. Another one that looks interesting. And then AMC. Now this one is different. This one, look at the downtrend. I wouldn't touch it. I have no interest. The stock's heavily shorted. And with COVID, quite honestly, AMC Entertainment, there's probably really good reason why the stock is being heavily shorted like this and why it's in this downtrend. So again, not every short squeeze stock, not every stock with a heavy short interest is one that you want to own. You don't want to own it really until it shows that strength. I like to see relative strength. I like to see absolute strength. I like to see the volume coming in, and then I like to ride. It's almost like catching a really good wave if you're a surfer, and I'm not a surfer, but I kind of feel like it would be the same thing. You know, just catching that wave perfect and riding it in, same thing. Catch that breakout, catch that uptrend, and just ride it. And there are different ways, you know, you could set your exits. You know, you could use something disciplined. You could maybe just pick out a dollar point that if a stock gets to, you're just going to get out no matter what. I mean, if you make 20% on a stock in the near term, that's pretty good. And so I wouldn't try to get too greedy, or maybe you sell part of it if it gets to a certain percentage and then hold on and see, maybe sell if it goes below, say, a 20-day moving average or something like that. So in the case of AMC, you know, on a breakout here, this one probably would not have worked out for me, because if I had got in on the breakout, first of all, I didn't like AMC. I don't like many of these entertainment stocks with COVID, but, you know, having it, you know, pull back, if I did get in on a breakout here, I probably would have gotten stopped out with a loss. This one would not have worked well. Bed Bath & Beyond. I mean, look at this move Bed Bath & Beyond was making. I mean, it's pulled back, but it's got pretty good support around 18. So breakout above the 20-day with volume starting to pick up would really start to interest me. And I believe this gap up at the beginning of October was earnings related. So we're probably getting close to another earnings report on Bed Bath & Beyond. All right, so organizing a list. So I want to talk a little bit about this because what we do at Earnings Beats, and I'm going to take you over to our site here, is we have these chart lists for our members. And so if you click on that, it'll take you to our chart list page. And then you can see we have a strong earnings chart list, relative strength industry group chart list, accumulation distribution chart list, and there's a short squeeze chart list, strong future earnings, raised guidance. So we got a number of different chart lists. And what you can do, we do all the research and the homework. And what you can do is, if you're a member, you just copy this password that's here, and then click on the short squeeze chart list. Now in this account, I've already downloaded it, so it's not going to ask me for the password, but if you're coming in for the first time, it's going to ask you for that password. I don't believe it'll ask me, but let's see here. No, so it's already taken me through. It's not asking me for the password. You'll get prompted. First time checking it out, you'll get prompted to put the password in. You just paste the one I just copied, and then it'll then click OK or whatever, and it'll bring you to this page. Now, once you get to here, you can go through and you can look at the stocks that are in the chart list. They're all listed here. There's 66 of them, I think, right now. So you can go through and there's the name and there's the percentage. Or if you're a StockCharts member, extra or pro, you have to be at least an extra member because you have to have enough. I think if you're just a basic member, you only get one chart list that you can have in your account. But I think if you upgrade to an extra membership, you can have up to 250 chart lists. So you can download all the chart lists we have at Earnings Beats and download them right into your account. So what I could do is I can save this chart list. Now I've already got it saved, but I'll just do a new list just so you can see. So what we'll call this is test case and short squeeze. All right. So I click on the save results and it's successfully saved just like that. A couple seconds. All of my research gets saved into the into my StockCharts account. So now I can go over here to StockCharts and go down to, I think what I have to do is probably refresh here. And let's see if it's down here. There it is, test case, short squeeze, all right? So now I pull this up and I've got the stocks in this short squeeze, okay? In the short squeeze chart list. Now, there are a couple things you can do with this. And this is something I do every day with the short squeeze chart list. If you view all, and you can do this with any of your chart list, hit the summary, and then intraday, it gives me the best performing stocks. So I can quickly see if any of these stocks are making big moves. Well, a lot of them are making big moves, but they all aren't. I mean, obviously, there's still a lot of them in the red. I don't worry about any of those in the red. I have no interest in a pullback. When it comes to short squeeze, I want to see stocks that are flying. So another thing, I mean, that's the intraday, but what if we went out a week to see what's been going up the most in the last week? Blink has gone up 71% in the last week. PGEN 46%, GameStop 40%, and so forth. How about a month? Blink 113% in the last month. Stitch Fix 102%. Look at how many of these stocks have had massive moves in the last month. I think you owe it all to the secular bull market that we're in. A lot of every company, well, not every company, but most companies are going higher. But the beauty of these going higher is that you've got others that are going to jump in. You've got the short sellers that are going to be pressured and emotionally challenged. I mean, you know how it is when you own a stock and the stock goes down 10%, 15%, and you start getting those terrible feelings. You know, it's like, oh, this is just the worst stock I've ever bought. I just need to get rid of it, especially if you're a trader. You know, capital being used in an area of the market that's not working while the market's going higher. I mean, it just wears on you emotionally. Well, for me personally, there's nothing worse than being in a bull market and shorting and losing. There's nothing that will, and I know that about me, there's nothing worse for me in trading than to be short a stock that's going up, period. But especially in a bull market. That's why I won't short in a bull market, because I know as soon as that stock starts to go against me, I'm getting the heck out. It will be it'll make me an emotional wreck because I just don't want to be on the short side in a bullish market. So you can see, though, the huge moves. All right. So the question is, what do these charts look like? Well, let's take a look at Blink. I told you when the stock breaks out above some key levels, if you get in, how fast they can go up sometimes. Look at Blink. Here it breaks out above $12.50 on November 17th. That was a Tuesday. The following Monday, it's at 35 from $13 or $14. That's pretty amazing. Now it goes back, hits its 20-day, but again, this would have been a great entry on a normal stock. On a stock that's on the short squeeze list, I don't really try to buy pullbacks to key support. Why? Because those on the short side are not going to be buying on a pullback. They're either going to buy after they've made their money, or they're going to buy when they start to get squeezed. Normally, after you watch a stock go up like this and pull back, I mean, maybe you get out, maybe you say, okay, I saw that big move up. I've got an opportunity to get out a little bit better than where, obviously where it was a week and a half earlier. But I think that the majority of shorts, and this is just my own opinion, but I think the majority cover when they're forced to. And that's what a short squeeze is all about. So using this list, I think, is powerful in order to identify. I mean, keep in mind that as you're seeing this, you're going to see it on that summary list every day. It's not like it's going to happen without you noticing. If you look at that every morning, once in the morning, once in the afternoon, at a minimum, you're going to see these stocks when they start moving. And they all move at different times. It's not like, they all go up at the same time. Right now, Blink's in a clear upward move to the upside. And the one thing you must keep in mind too is you have to have kind of a risky attitude. You've got to be a real risk taker to get into these short squeeze candidates. But if you're a short-term trader, I think this is probably one of the absolute best chart lists to have. You want this short squeeze chart list because it's giving you breakouts on stocks where you're almost guaranteed that buyers are going to start jumping in. I mean, imagine being in the short position and watching a stock go from 13 to 35. You're losing with every tick to the upside. And this isn't a tick. It is an absolute rocket ship to the upside. Imagine how much money you would lose in 5 or 6 days if you're on the short side. Tell me that wouldn't pressure you into buying. All right. So we go back. How about Stitch Fix? Stitch Fix, 102%. Now look at these percentages, by the way. 36%. That's the short percentage of float. Blink, 27%. I mean, it's not 130%, but these are still really high numbers. And every one of these you see are above that 20% level. They don't get on this list unless they're at least 20%. So let's take a look at, I wanted to do Stitch Fix. Let's go back and do that one first. We'll come back. Look at Stitch Fix. Look at the gap up here. And then, I mean, this has just been constant pain and torture for anyone who's on the short side. You just keep thinking, well, I'm going to wait for it to pull back. It's kind of like a stock, that's going down, and you own it, and you just keep thinking, well, I'm losing a lot of money here, but let me just get a bounce, and then I'll get out and take a smaller loss. And the stock goes down the next day, and it goes down the next day, and it goes down the next day, and it just keeps going down, and you can't ever get that bounce to get out. That's exactly what's happening to the shorts here, except one big difference. They have unlimited loss potential. Remember, I mean, they're losing as it goes up. Where's this going to stop? Is it going to stop at 70? Is it going to stop at 80? Is it going to stop at 100? How about 200? I mean, who knows, right? We don't know. We've seen a lot of stocks go crazy, and especially stocks that are heavily shorted. Before I give or go back and show you some of the others, I just want to point out Jinko Solar was one that was on our short list a few months ago. Look at this. I think I counted that this stock put in a higher low. I want to say it was like 35 days in a row. I'd have to go back and count them again to see. I've never seen a stock ever before in my entire career. I've never seen a stock go up and put in a higher low 35 consecutive days. It just kept, look at the volume. This was one of our short squeeze stocks. And I remember actually talking about it. Right here is when they came out with earnings, when they went through 30. And when it broke out here, I mentioned it. I said it's earnings, and I said it's got a lot of short interest. And you can see what happened over the next several weeks. So it is really important to catch these and to be aware of the short interest. That's obviously some great knowledge to have. All right, so let's see here. That was Stitch Fix. All right, let's take a look at VERI, which is Veritone. And once again, look at this move to the upside and the volume picking up. Finally, a blow off top here. Look at the volume on that day. And now it's been consolidating, but breakout above 36 and this thing probably be off to the races again, but it's still continuing to perform very well, holding above that 20-day. All right, PGEN, just a couple more of these, and then we're going to wrap up. Precigen, look at this. Here was your breakout back at, I don't know, $6.50. Ran all the way to about 9, unabated, before finally settling down a little bit. Came back down one day, and then boom. Might have gotten stopped out that day, too, if I was using the 20-day. But that'll show you, too, the kind of volatility that you can experience. So you got to be comfortable with that kind of volatility. I'm going to show you one more because this is one that I put into the daily market report to members when it got up to about 9.5. I want you to take a look at this stock. So in our daily market report, you can see all these tops coming in at $9. Right here, we went through $9, and I believe it was the next day. I think it was probably December 15th that I put this in the daily market report to members and said, we've got a short squeeze potential with AKTS. Stock breaking out above these prior highs. Look at the volume picking up. That was at 9.5. Here we are 1, 2, 3, 4, 5 days later, $12.43. That's $3. It's over 30%. Over 30% in 5-6 trading days. So if you're not aware of this, this is a great way to kind of boost your trading results. But again, just keep in mind that it is very, very risky. These stocks tend to be volatile, so you got to be okay with that volatility. But definitely something to think about. All right, hope you've enjoyed this special presentation on the short squeeze. And if you're interested, come on over to earningsbeats.com. We've got a 30-day trial. You can download this right into your account at StockCharts. Wishing everybody a great day. Happy trading.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.